McGuire from XM.com is with us. Peter, good to have you on the show. Thank you for joining in. Let's start with commodities. Crude oil has gone down. It's broken a 9 to 10 session gaining run. What's the near-term outlook there?
Well, I think it had a very strong uptick. And good morning. Thanks for inviting me on the show. When you think of what happened last week, up 5%, up on Monday 2%, we had the 4th of July holiday period, and then, of course, the market was probably just, exhausted a bit to the upside, profit-taking, and a little bit of consolidation. So that's the essence of it. I think that it'll probably oscillate between that 45 to 50 unless you see something dramatic happen. Something's got to happen with Qatar or something dramatic with North Korea to really shift it out of that current range, I think.
I know this is not very crude specific, but help us understand this. We've actually stopped talking about those GCC concerns. What is the sense that you're getting? I mean, what is the status when you look at Qatar, look at what's going on with Saudi? Any sort of improvement, any sort of relief on that stress that's building up? Like I said, not much to do with crude, but it'd be good to get some update on the geopolitical stress in that part of the world.
Well, exactly, Samina. I mean, look, you're thinking about what's happened as far as Iraq. There's talk now that ISIS has been thoroughly defeated, and in turn that'll all wash over the market over the next, say, 4 to 6 weeks. They want to increase their production naturally, and they've been hamstrung. They're the second largest producer in OPEC, and they're being constrained at 4 million barrels or approximate per day, while Saudis are doing 10. So they want to increase their revenue stream. And it's going to be interesting, the context of OPEC, how it plays over the next couple of months. I think fundamentally the market is, we've seen a very solid washout as far as US dollar over the, say, April, May and June quarter of this year. We're down about 5%, the biggest fall since 2010 for a quarter on quarter. So it's quite dramatic, that US dollar sell-off, and that's really also affected crude. So I think at the present time, traders are just trading ranges and stacking positions until you get a definitive breakout.
Right. Peter, what do you feel about the dollar index? Because from the start of January, we've seen a big cool-off. And off late, we've seen some signs of partial strengthening. Now, we've had the FOMC commentary also. It seems to be a split house as far as the timeline of winding down those principal reinvestments are concerned. What do you think could the long-term impact of this be on the dollar? Do you feel that there's further weakening which is in course? And thereby, what do you feel about commodities?
Well, first off, I think you're looking at the dollar. I mean, there are certain central bankers around the world that are, I think, rubbing their hands together in the sense of economic prosperity or economic growth from some of those economies. And there's the hawks are out, and probably over the matter of the European summer and leading up until the end of the year, you may see rate rises continue across some of those. So that's certainly going to impact, I think, the US dollar. Let's see where Yellen plays over the next couple of months as well, as far as the US raising rates. And then rolling that across the commodities, well, if they do see the US dollar strengthen, I think that's going to be a downdraft for gold. And if you don't see the US dollar strengthen because the other currencies and the US dollar weakens further, then that's going to also add, I think, more confusion to the market. Be interesting to see what equities do and bond rates. So I think that for the next 6 months, I think the market to watch is certainly US dollar and what the hawkish statements coming from central bankers is all about.
Peter, what's the call on the rupee? It was only a few weeks ago that we were talking about levels of 64 getting threatened on the currency. Clearly, that's not happening, and we've moved closer to 65 now. On the dollar-rupee pair, what's the trade? Further weakness expected in the next few weeks?
Well, Selena, I think where you're looking at it probably oscillate between, as I said, now that 64 to 66 sort of number. It'll be tight range bound. You won't see a lot of movement other than what it's inherently doing. And that seems to be the pretty much the status quo for that for the currency pair. Unless you see something dramatic happen, as far as to push interest rates up further in India, I think at the present time it's going to stay at that sort of number, and that'll just be a range-bound trade.
Right. Peter, where does the preference lie for emerging markets, and what currency in the EM pack will you be positive on, given the strong run most of them have in any case seen? And what do you feel about inward flows into fixed income for specifically for India, given that we are probably looking at one or two more rate cuts down the line?
Well, that's right. I mean, look, first off, I think you have a close look at the likes of Vietnam. I mean, they're just, shooting the lights out as far as performance for emerging markets. That whole region, and I think that's principally going to be a continued growth story over the next, 10 or 15 years. It's catching a lot of those or a little bit more mature markets along. And so that's one certainly to keep an eye on. The next part, and have a look at also at Malaysia. But the other side, of course, is they're close to your home. And then inflows into India. Well, with interest rates, there's talk of, a couple of further falls. So it's going to be a difficult one. I think you'll eventually see, vast sums come in as far as infrastructure spend and partnerships. The India story is not going away. Young demographic and burgeoning economy and good growth numbers as far as IMF's concerned. So fundamentally, I think you've got all your ducks in a row. It's just a wait and see, and it may take a little bit more time. But I think India's got plenty of time because it's going to be a great century ahead.
Peter, very lastly, what is all the euphoria across the metal universe about? I mean, I'm not really seeing sustainable growth in most parts of the world, but metal prices are reflecting a very different story.
Well, that's right. I mean, when you look at gold, and it's had a month ago, it was at nearly 1,300. It's now at 1,225. It was washed out. And then you look at, the silver market, similar. Precious metals have really taken a hemorrhage. Have a look at what copper's done over the last matter of, I suppose, put your mind back. Over the month, it's been fairly, all over the place. Had a nice rally up, but it's been sold off since the start of the month. It's probably, facing a little bit further backwards territory. And some of those other metals are probably in a similar, similar, the industrials, that is, a similar situation. So that seems to be very much the front and centre of it at the moment. Aluminium, zinc's had a big washout. Very, very volatile, and a lot of them are, overbought and oversold. So just depends on the time frame and the instrument you're travelling with. But, volatility, I think, will remain across a lot of those sectors.
Very lastly, Peter, the first 6 months of the year have been fantastic, to say the least. Not just for India, for Europe, for most parts of Asia, for developed markets like America. In the next 6 months, I know you don't track equities very closely, but is it going to be risk-on trade and excess liquidity taking over equities worldwide, and of course some more gains from these levels?
Well, look, that's a hard one to forecast. I mean, have a look at what we've done since that Trump rally. It's been a dramatic rise, and I think that, at the moment, the hands are on the wheel, and, manufacturing is looking strong in the US, and I think it'll probably continue. But I think most traders have got to be very mindful. What does the Fed do? Where do interest rates go? What happens as far as, Eurozone and so on? If there's no big catastrophes, and Italy doesn't say, as far as banks and so on, if nothing really comes to the party and disrupts anything, then you'll probably continue to see upward growth. Valuations are interesting, PE ratios and so on, but I think many traders are, in for short to medium term, and they're keeping a very close eye on the market.